Most people don't lose in the crypto market because of bad coins, they lose because of invisible risks. Risks that you only recognize when your portfolio is already down 50%. If you are currently invested or considering investing, then this video is crucial because today I will show you the 7 biggest risks that can destroy your crypto portfolio. And even more importantly, how you can systematically avoid them. Because the question is not if, but when there will be another crash. And even the most experienced investors underestimate risk number 4. Hi, I'm Marius from 10x Invest, and today we're going to look at the 7 biggest risks in the crypto market. And not from an emotional perspective, but purely data-driven, with clear solution strategies. So if you want to build wealth in the long term, you don't need luck, you need a system. And this is exactly where most people fail. They buy coins, but they don't manage risk. So let's get started right away with the first risk. Because at first it seems harmless, but in the long run it's extremely dangerous. Risk number 1. No clear strategy. Many people just buy because the market is rising or because a coin is currently trending. Without a plan and ultimately without an entry strategy. But also without clear exit rules. But the solution is actually simple. Define before every investment. First, why am I actually buying? 2. When do I buy more? 3. When do I sell? Without these 3 rules, you are not investing, period. And now comes another risk that can get really expensive. Risk number 2, wrong position size. Even a good coin can destroy your portfolio if you put way too much capital into a single position. Crypto is volatile. Drops of 50 to 90% are normal. And if 40% of your capital is tied up in just one coin, your portfolio is immediately heavily damaged. But the solution is diversification. In other words, limit individual positions and work with fixed percentage rules. But even that doesn't protect you from risks. Number 3, emotional decisions. FOMO in a bull market, panic during a crash, both destroy returns. Emotions lead to buying at the top and selling at the bottom. The solution is a rule-based system, clear DCA zones and clear profit taking. In other words, no gut feeling decisions. And now it gets even more critical, because this risk affects almost everyone. Risk number 4, lack of liquidity planning. Many invest 100% of their capital, without reserves. If a crash comes, yes, there's no capital left to buy more. Or worse, you have to sell at a loss. What is the solution? Maintain strategic liquidity. Plan for cash reserves. Capital management is more important than the perfect coin. But what if the coin itself is the problem? Let's move on to risk. Number 5. Poor fundamental analysis. Not every project survives. For example, narratives change. Technologies can fail. The tokenomics dilute your investment, so you need clear valuation metrics, market capitalization, token distribution, roadmap, but also how strong is the team and the use case really. Without fundamental analysis, it's pure speculation, but even good projects are not risk-free. Let's move on to risk number 6, ignoring market cycles. Crypto always moves in cycles. Bull market, correction, bear market, but also the accumulation phase. Those who buy aggressively in the bull market and sell in panic during the bear market have a problem, because it destroys returns. The solution? Understand the macro cycles. In other words, scale your risk according to the market phase. And now comes the last risk, which is usually underestimated. Risk number 7. No overarching system. Many people collect coins, but ultimately they build. No real portfolio. No ranking. Without any real rating systems. Without a clear structure. Success? However, it arises through repeatability, not by chance. A structured investment system separates emotions from decisions. And this is precisely where long-term success is decided. If you control these 7 risks, you will also change your entire investment outcome. Because returns are not just generated by good coins, but by good risk management. Most investors only recognize these mistakes when it's actually already too late. I know this myself at this point, without a clear system, with unnecessary losses and mistakes. But it wasn't until I developed a database framework that helped me. Today I invest in a structured way, with clear rules, with a ranking system for altcoins, stocks, and also with my Zenix indicator. Because it's data-based. By the way, you can find exactly this system in the Zenix Elite. There you also get my complete investment system, regular market updates, and portfolio structures. You can find all the information in the video description. But how do you see it now? What has been your biggest mistake so far in crypto? Feel free to write it in the comments.